Hey everyone, welcome back to Wealth for You, the channel where we help you build wealth smarter, not harder. If you're serious about building passive income and getting ahead financially, hit that subscribe button and smash the like, because today's story is one you won't want to miss. Imagine this. The world's in panic, the markets are crashing, headlines are screaming recession, and one man in Singapore quietly starts buying DBS, UOB, and OCBC at fire sale prices. No fancy degrees, no Wall Street background, just pure conviction and strategy. That man is Eng Teong, a regular Singapore civil servant. And what he did during the COVID crash might just inspire your next move. But before we dive in, a quick but important disclaimer. This video is for educational and informational purposes only. It's not financial advice. Always do your own research and speak to a licensed financial advisor before making any investment decisions. Now, stay with me till the end, because we're not just breaking down what he bought. We're showing you how he did it, why it worked, and where his bank stocks are today. This could be the roadmap for anyone hoping to turn a crisis into retirement cash flow. So don't go anywhere. And if you're ready to learn how crash buying can build real wealth, like this video, and let's get started. Chapter 1. Setting the Scene. COVID Crash, 2020. In March 2020, the world went into lockdown, and global stock markets went into free fall. Singapore's market wasn't spared. Even our most stable blue-chip stocks, DBS, UOB, and OCBC, plunged sharply. At one point, all three banks were trading below their book value, which basically means their share prices were lower than the actual net worth of their assets. In simple terms, the market was offering these solid banks at a discount, as if they were worth less than what they owned on paper. While most investors panicked, one man saw opportunity. Eng Teong, a Singapore civil servant, stayed calm. He believed in the long-term strength of Singapore's banking sector, and more importantly, he had a plan. Chapter 2. Eng Teong's Strategy. Dollar Cost Averaging in a Crash. While the world was gripped by fear, Eng Teong started quietly accumulating Singapore bank stocks. During the steep market drop, he picked up DBS at an average of $21, UOB also at $21, and OCBC at just $9. But here's the key. He didn't dump all his money in at once. Instead, he used a tried and tested method called dollar cost averaging, or DCA. That means he invested small, consistent amounts over time throughout 2020 and into 2021, regardless of short-term market swings. He started off using funds from his CPF Ordinary Account, then followed up with cash savings and eventually his Supplementary Retirement Scheme, or SRS. By spreading out his investments and tapping into multiple sources, he maintained flexibility without overcommitting at any one time. Eng Teong wasn't trying to time the bottom. He focused on building his position slowly and steadily, buying more when prices dropped, holding when prices recovered. No margin, no leverage, no fancy trades, just disciplined investing in strong dividend-paying companies. It was a simple approach, but during chaotic times, simplicity and consistency often win. Chapter 3. Where is he now? Fast forward to today. It's been nearly 5 years since that moment of uncertainty in 2020. So how did things turn out for Eng Teong? Let's just say, his patience paid off. DBS is now trading above $40, UOB is hovering close to $35, and OCBC has climbed to nearly $16. That's a solid gain across the board from the prices he first bought at during the COVID crash. But the real beauty? It's in the dividends. Over the past few years, Eng Teong has been quietly collecting dividend payouts, year after year, from all three banks. And because he bought in during the crash, his yield on cost is much higher than what new investors today would get. DBS at $21 gives him a 13.68% yield on cost. UOB at $21 gives him a 9.95% yield on cost. And OCBC at $9 gives him a 10.89% yield on cost. In plain terms, for every $100 he invested back in 2020, Eng Teong now receives about $13.68 in passive income each year, and that's before counting his capital gains. Today, those dividend payouts help him grow his investment portfolio and lay the groundwork for a more secure retirement, perhaps even supplementing his future CPF income. I didn't need to time the bottom perfectly. I just needed to stay consistent, Eng Teong said. His story is a powerful reminder that with long-term thinking, discipline, and just a bit of courage during times of fear, you can turn a market crash into a wealth-building opportunity, especially when you're focused on generating steady, reliable passive income for the future. Chapter 4. Lessons for Investors. Should you buy the dip? Eng Teong's story isn't just inspiring. It offers a few powerful lessons for every investor. 1. Crashes are scary, but they also create opportunity. When everyone else is running for the exits, prices often fall far below a stock's real value. That's when disciplined investors quietly accumulate. 2. Dollar cost averaging reduces the stress of timing. Trying to time the perfect bottom is nearly impossible. But by investing regularly, rain or shine, you smooth out the ups and downs and avoid emotional decision-making. 3. Focus on quality dividend stocks that can survive and recover. Not every company makes it through a crisis. Stick to strong, resilient businesses with solid balance sheets, like banks that continue to pay dividends through thick and thin. 4. Passive income is built slowly, not overnight. Eng Teong didn't get rich in a month, but year by year, his dividend payouts grew, and now they're a meaningful part of his long-term retirement plan. Of course, not every crash is the same, and not every dip is a buy. But if you've done your research, stay calm, and think long-term, crash buying, done wisely, can be a powerful way to build wealth and passive income for your future. Conclusion. So what can we learn from Eng Teong's story? That even during a crisis, with the right mindset, a solid plan, and steady action, you can turn market fear into long-term wealth and passive income. If his story inspired you, drop a like and tell us in the comments, what stocks would you buy if the market crashes again? We'd love to hear your strategy. And if you want more real stories and smart investing tips just like this one, hit that subscribe button and join us here at Wealth for You. Because remember, don't just be rich, be cash flow rich.